Hello everyone and welcome to Edupedia World. Today we are going to continue with Unit 1 of Chapter 2 and today we are going to do the second part of this unit, that is scope of total income. We are done with the first part of this unit, that was the determination of the residential status of an assessee, and now we'll move on to the second part of this unit, that is scope of total income. How the total income of the different categories of assessees will be determined and what will be included in the total income of different category of assessees. The categories which have been categorized on the basis of residential status, that is the total income of a resident, how that will be calculated, the total income of a non-resident, total income of a resident and ordinary resident, and resident but not ordinary resident. All these things will be discussed in today's class. So let's start with it. The scope of total income. Section 5 of the Income Tax Act provides the scope of total income in terms of the residential status of the assessee, because the incidence of tax on any person depends upon his residential status. So, the residential status of any person will determine that whether the income earned by him or her will be taxed or not, and whatever income he or she is earning, whether that will come under the ambit of total taxable income. So section 5 puts all the emphasis on the residential status of the assessee. So the residential status, the determination of residential status of the assessee plays a very, very important part in the scope of total income. The scope of total income of an assessee depends upon the following three important considerations. The residential status of the assessee, number one. We have already discussed above that the main thing, the most important thing which determines the scope of total income and which determines whether the particular income earned by an assessee will be included in the total taxable income or not. So the residential status of an assessee is one of the important considerations in the scope of total income. Number two is the place of accrual or receipt of income, whether actual or deemed. So the place also is important to determine whether the income of an assessee will be included in the total income or not. So if I am earning anything in India and if I am earning anything outside India, so the place plays a very important role, whether the place of accrual or receipt is in India or whether the place of accrual or receipt of income is outside India. This plays an important role in the determination of total income of an assessee. So this income can be actual or deemed. Whether actual or whether deemed, the place plays an important role. And number three is the point of time at which the income had accrued to or was received by or on behalf of the assessee. So the point of time also plays an important role. At what point of time the income was received or the income had accrued to the assessee or on behalf of the assessee on anyone else. So these are the three important considerations which we need to keep in mind in the determination of total income. Number one is the residential status of the assessee, that is very, very important consideration. Number two is the place of accrual or receipt of income. We have to see where the income is accruing or where the assessee is receiving the income. And number three is the point of time. So these are the three important considerations. So keeping these three in mind, the ambit of the total income of the three classes of assessees would be as follows. The first category, that is resident and ordinarily resident. How the total income of this category will be taxed. The total income of a resident assessee would, under Section 5(1), consist of these three incomes. If an assessee is falling under the category of resident and ordinarily resident, then all these types of income earned by him or her will come under the purview of total income. What are they? Number one, income received or deemed to be received in India during the previous year. So, whatever income he is receiving or deemed to receive in India during the previous year, that will come under the scope of total income. Number two, income which accrues or arises or is deemed to accrue or arise in India. Number one was the income which he has received. Number two is the income which accrues to him, which he has not received but he will receive in some later point of time. So that also will be included in the scope of total income, total taxable income. And number three, income which accrues or arises outside India, even if it is not received or brought into India during the previous year. So, if he is a resident and ordinarily resident and he is earning income outside India, that is, the income is accruing to him outside India, and that income is whether brought or not, that does not matter, but he is earning income outside India, then that income will also be taxable during the previous year. So whatever, in short, we can say that a resident and ordinarily resident has to pay tax on the total income accrued or deemed to accrue, received or deemed to be received in or outside India. That is, whatever he is earning and wherever he is earning, if he is a resident and ordinarily resident, all his incomes will be under the scope of total income and come under the purview of Indian Income Tax Act. Now comes the second category, that is resident but not ordinarily resident. What about their income? So under sections 5(1), the computation of total income of resident but not ordinarily resident is the same as in the case of resident and ordinarily resident stated in the previous slide, except for the fact that the income accruing or arising to him outside India is not to be included in his total income. So, as per section 5(1), all the provisions and all the income which are coming under the total income of resident and ordinarily resident will also come under the total income of resident but not ordinarily resident, except one income, and that is the income which will accrue or arise to him outside India. Only that income will not be included in his total income, and apart from that, all the incomes will be included, and that is income received or deemed to be received in India and income accruing or deemed to accrue in India. All those incomes will be included. One point here is that, however, where such income, that is the income which is accruing or arising outside India, is derived from a business controlled from or professional setup in India, then it must be included in his total income even though it accrues or arises outside India. So, if some income is accruing or arising to him outside India from any business or professional setup which is being controlled in India, then that income will be included in his total income. So this one point we have to keep in mind, that if any income is accruing outside India, but the source of that income, that is the income is being earned outside India, but the business from which the income is being earned or the professional setup from which the income is being earned is in India. So that income will be included in the total income. Now comes the third and the last category, that is non-residents. What is includable in the total income of non-residents? A non-resident's total income under section 5 subsection 2 includes: number 1, income received or deemed to be received in India in the previous year, and number 2, income which accrues or arises or is deemed to accrue or arise in India during the previous year. So for a non-resident, all the incomes received and earned by them or accruing to them in India is taxable. So whatever they are earning in India and receiving in India, only that part of income is taxable, and apart from that, nothing is taxable. So for non-residents, all the incomes received or deemed to be received or accruing or deemed to accrue in India is taxable. Now, after going through the scope of total income of all the three types of assessees, that is, resident and ordinarily resident, resident but not ordinarily resident, and non-resident, we can make note of these 2 points. Number 1 is that all assessees, whether resident or not, are chargeable to tax in respect of their income accrued, arisen, received, or deemed to accrue, arise, or to be received in India. We have gone through that whether a assessee is a resident, a non-resident, or a resident but ordinarily resident, resident but not ordinarily resident, whatever may be the case. If he is earning any income in India, then he is liable to pay tax on it. So any type of income which has accrued, arisen, received, or deemed to accrue, arise, or to be received in India is chargeable to tax, whereas residents alone are chargeable to tax in respect of income which accrues or arises outside India. Only the residents are chargeable to tax in respect of income earned outside India, whereas non-residents are not liable to pay any tax on the income earned outside India. So we can make note of these 2 points in order to understand the concept of scope of total income in a better way. Number 1 is that whatever the assessee is, whether resident or non-resident, he is liable to pay tax on any income which accrue, arise, or received in India, and only residents are chargeable to tax in respect of income accrued or arisen outside India. This comparative chart will help you in understanding the scope of total income of all these 3 types of assessee in a more better way, and it will help you in retaining what is includable and what is not includable in the total income of these 3 types of assessees. Number 1, resident and ordinarily resident. What is includable? Every income earned by a resident and ordinarily resident is includable in the total income. So income received or deemed to be received, accrued or arisen or deemed to accrue or arise in or outside India. Whatever income he is earning, whether in India or outside India, it has to be included in the total income of a resident and ordinarily resident. So if I am a resident and ordinarily resident, I will include each and every income which I am receiving or which is accruing to me in India or outside India. Resident but not ordinarily resident. The income which is received or deemed to be received or accrued or arisen or deemed to accrue or arise in India, that is includable, and income which accrues or arises outside India being derived from a business controlled from or profession set up in India. So whatever income is arising in India or whatever income I am receiving in India is chargeable to tax, and the income which is arising from outside India but that business is being controlled in India, so that income will be also included. So if I am a resident but not ordinarily resident, all the income which I am earning in India will be chargeable to tax, as well as the income which I am earning outside India, but that income is being derived from a business which is controlled from or profession set up in India, then that will also be includable in my total income. Lastly comes the non-resident. The income which is received or deemed to be received, accrued or arisen or deemed to accrue or arise in India is only chargeable to tax. So if I am a non-resident, whatever I am earning in India, only that income is chargeable to tax. So you have to keep this chart in your mind to understand and to learn what is includable and what is not includable in the total income of all these three types of assessees. Thank you, students. With this unit, we are done with chapter 2, and in the next class, we will start with our chapter 3, which is income which do not form part of total income. Hope you found today's class worthy.